The metaverse has been an absolute failure, and we'll show you the statistics to prove it on today's show. But good thing, it is a very, very good thing that Meta has a $130 billion ad business, which looks like it's about to fire on all cylinders. What is going on, investors? Hopefully, you guys are doing well out there. Time to talk about Meta Platforms, formerly known as Facebook, ticker symbol Meta. Over the last year, the stock is up, just 76%, and year to date, even more than that, up over 141% as investors digested the news of Mark Zuckerberg spending billions and billions and billions of dollars on a Reality Labs project, which certainly looks like it's going absolutely nowhere. Luckily for Mark, is the ad business looks like it has finally turned a corner and things are looking up in that sense. The company reported their Q2 earnings after the bell today. Revenue coming in at $32 billion. That was 11% growth year over year, and it beat expectations by a whopping $970 million. Now, when we come forward and look at the upcoming revenue guidance, Meta does actually a pretty nice job giving you kind of forward revenue estimates, but also giving you an idea on expenses. Now, it tends to be a little bit of a moving target. As you'll see, they've moved some things around, but revenue coming in the upcoming quarter between $32 and $34.5 billion. The Wall Street estimate was for $31.1 billion. The high end out of, we're talking about 40 so-called experts on Wall Street, was expecting $32.6 billion. Meta probably going to come in closer to $35 billion. Now, what they're not going to necessarily tell you at the head of a press release is this revenue guidance includes a tailwind of foreign exchange, which obviously has reversed over the last year, but still really, really solid growth on that revenue side. Again, driven primarily by ad spend over at Meta. Now, they gave us full year expenses coming in between $88 and $91 billion. The previous range was just south of that, but this does include $4 billion in restructuring. The company has reduced their headcount over the last year by about 14%. And so the fact that they realized these restructuring costs, the severance costs, and all those types of things, and their full year expenses didn't tick up more than this, actually relatively impressive. And they gave us full year CapEx between $27 and $30 billion. The prior range was from 30 to 33. That is lower due to the fact that they're reducing their spend on non-AI server spend, so kind of your traditional cloud spend. The rumor has it that Intel was supposed to deliver a chip to Meta sometime this year, and Intel, like they tend to often do over the past couple of years, were not able to deliver that. That is why Meta was on stage with AMD just several weeks ago. That was not planned. In fact, just a week prior to that AMD event, Meta decided to come on stage almost in an effort to pressure Intel to get its act together. But could be that beginning next year, you could have some AMD follow through into Meta. Again, the forward estimates, I think, are going to have to get completely revised as we look for Meta. Next quarter, probably going to be $35 billion. That means our fourth quarter, barring some kind of like massive recession or something that everybody's been predicting for 2.5 years here in the United States. Look, we're probably up 37, maybe 38, maybe $40 billion in revenue coming in Q4. So this company comfortably growing in a mid-teens growth rate really for the foreseeable future. When you come over here and look at the revenue, the company has done a nice job year over year. Your total costs and expenses went up from 20.5 up to $22.6 billion, driven primarily by the fact that they lowered their marketing and sales spend despite 11% year over year growth on that revenue side. This is the kind of companies that I absolutely love that can drive top line revenue by not having to spend as much or more on marketing and sales. We saw other costs essentially go up across the board until including a pretty significant from $3 billion up to $4.1 billion on the G&A side. But anytime they got one of these little like subheadings here, it essentially is legal related costs. So those corporate lawyers over at Meta certainly probably having a nice dinner and lunch and maybe a new vacation house after racking up $1 billion bill in just 3 months for the company. A lot of this flows down to the net income side of the balance sheet, and we'll show you when we get over to cash flow company continues to buy back the shares. Now, speaking of cash flow, things look absolutely sensational here, primarily due to the fact that they were able to add back in kind of those accrued expenses over the past 3 months. You went from $12 billion of operating cash flow all the way up to 17. CapEx spend, or, purchase of property, plant, and equipment, actually trended down year over year. Now, the company did raise money in the most recent quarter, about $8.5 billion, but they also repurchased nearly $1 billion worth of shares. Here's that long-term debt sitting on the balance sheet. Again, it's doubled over the last year. They've decided to raise money over at Meta. I'm not exactly sure why. Probably just simply because the rates were favorable enough. Long-term debt went from, we'll call it $10 billion up to $18 billion, but it's balanced off by, not maybe compared to Google and Apple, maybe not a mountain of cash, but certainly a nice hill of cash, well north of about $50 billion on the cash side for Meta. Now, here's where things get interesting for the company. The advertising business just absolutely humming along. $28 billion all the way up to $31.5 billion for the last 6 months. It went from $55 billion up to nearly $60 billion. They generate some other non-significant revenue. And again, that ad business and like, I love when Mark stays in his lane, social media, online advertising, that is his lane. The metaverse is not his lane. Look at Reality Labs, folks. Last year, $452 million. And somebody always gets in my comments whenever I do a meta video and talks about the future of the metaverse and the Oculus. It's so cool, and it's just not its time. When in the history of technology has we've not seen a hockey stick like demand for a product that would then realize that demand later? No. Great tech is realized right away. You know it right when you see it. And look at Reality Labs, from $452 million all the way down to $276 million. So despite releasing a new model, dropping the price on these things, we assume there's probably more content and new content. Your revenues are basically being cut in half. And on top of that, this is a business that is losing and bleeding lots of money. Last year, off of $452 million worth of revenue, which is nothing to a company this size, they lost $2.8 billion, which is actually significant to a company that generates about $11 billion in profit off of their ad business. Now, this year, off of $276 million in revenue, we lost even more. We lost about $3.7 billion, which is significant considering your ad business brought in $13 billion. Off the top of my head, that's about 25% of your income from operations from your ad business, funding a business that has declining revenues year over year. You see hockey stick moments, and there's no reward. There is no reward for being early to the metaverse, folks. Just like Yahoo, just like BlackBerry, just like all the other graveyard of technology out there, there really is no reward to being early. It's being there at the right time with the right product, and I don't think it's there. I would love to see them can this entire thing, and then all of a sudden this stock would certainly go to new highs. But look, it's not having any problems doing that, considering we're on a monthly chart and you've got 1, 2, 3, 4, 5, 6, 7, 8, 9. We are in our 10th consecutive month of gains for Meta stock as it just continues to push higher and higher, as I believe investors are focused on the right thing. I know I'm criticizing Meta and it's maybe a little bit of nitpicking, but investors are focusing on the right thing. The fact that they are driving revenue acceleration back on their guidance, and all of this revenue guidance for the next, well, I'll call it 3 to 4 quarters, will need to be revised up. So when you look at the valuation of Meta, which is, we'll call it, quote, ballooned to over 25 times forward earnings, just like on the way down as their earnings contracted, that PE was more or less a value trap. Now it's artificially high. Meta is actually probably trading at a discount to whatever PE metric you see on any of your financial sites. This stock is probably trading south of a 20 PE, which is why it will continue to move higher and higher. And if for some reason they can stop the bleed on this Reality Labs business, this is a stone cold value stock, even at these levels, considering what they've done from a cost perspective. Most investors are probably waiting for some kind of pullback. This one looks destined to retest these these highs all the way up here at about $380. If it doesn't, it's not necessarily the end of the world. The longer term trend, obviously, on Meta continues to be higher. That was Meta, folks. The ad business is back. Google confirmed that yesterday. Meta is confirming this now. I would not, and I repeat, I would not translate this into what Pinterest is doing, The Trade Desk, certainly Snapchat, or any of these other ones. It looks like to me the top of the funnel advertiser, which online is simply Meta and Google, they are getting all of the money. I don't think we're going to see it all the way down to the bottom of the funnel, the Pinterests, the Snapchats, and the smaller social media sites out there. But that is good news for these companies, as when the top of the funnel comes back, likely means those ad dollars are there to stay, at least in the shorter term. Again, Meta is going to have their revenue estimates guided back up, and this stock is looking even better. Despite a 140% rally year to date, this one probably has further to go. Hopefully, you guys enjoyed today's video. We'll be back again later this week. Good luck with your investments.